Assalamu alaikum. Today we will discuss what is single entry system. Before going towards lecture, I will request you please like, subscribe and comments my channel. Our topic is today single entry system. Single entry system actually is not a system. It is not a double entry system. Small businesses record their transaction through this system. We can find this system in shape of partial double entry system or just simple recording of transactions on a register. Partial double entry system mean if a businessman who is running his business through single entry system using single entry system do not made proper entry. For example, if he sale on credit, he will not made proper double entry system like receivable to sale account. He will only note down receivable account. He will make entry in only ledger of receivable, not in sale. So this is not possible to make trial balance in this system. I will explain a little more. If any clients come to you who is running his business without using double entry system and request you to help him to make profit and loss count, you ask him, why do you need profit and loss count? He says that he has to submit to tax authorities and want to apply for loan from any bank. He can't provide you trial balance because he run his business through single entry system. Therefore, you will have to conduct an interview about his financial position on starting of financial year and at the end of financial year. Opening position will be called opening statement of affair and ending position will be called ending statement of affair. In next coming slides you will 100% clear all this matter. With the help of these statements, profit and loss count is made. This method of preparing of profit and loss count is called net worth method. In next slide you will see opening and closing statement of affairs and profit and loss count. You conducted an interview of client to come to know that what was the position on starting of financial year and at the end of financial year. He has provided you the following information, and please also note that these data will be given in the question. In practical life you will have to ask all this information from client. You ask him what was your cash in hand. He told you that 20,000, bank 400,000, and in stock there was 750,000. Furniture cost was 12,000. Debtor mean receivables. Debtor was on the starting of financial period was 445,000 and liability were 900,000. And at the end of the year you can see that cash in hand increase up to 42,000 and bank was 500,000 and 550,000. Stock was 790,000 and furniture same figure 12,000. Debtor was 980,000 and liability was 850,000. Now you will calculate profit and loss through this information. You can see that these all items are related to balance sheet, but here one thing is missing in both opening and closing balances, that is capital. Capital will be balancing figure, and here are some adjustment. You can see that there is furniture 12,000 at the end. At the beginning there was also 12,000. Customer will not tell you, but you will have to inform that 10% depreciation should be charged on furniture. And customer also inform you that he introduced fresh capital of 150,000 and he took drawing of 60,000 for his personal expenses. So this is information is available. Now we will make profit and loss count. First of all, we will made opening statement of affair. In next slide you can see that I have put that data of opening balances into a balance sheet like performa. This is actual data given by him, and this is also actual data given by him. These are liability 900,000 in mention in previous slide, and this is cash asset side and this is liability side. This capital was not given by the customer. This is balancing figure. We transfer bigger side to small side. Its total is 1,627,000. We transfer this figure to small side and then minus that and we ascertain this figure 727,000. This is opening capital, you can say. Now we will see how ending statement of affairs is made. Now you can see that in same way we put all assets and liability on assets and liability side, like we will do this in previous slide. Because you know that 10% should be charged on furniture, we mention 10,800 as net figure. You can see that we minus 10% out of 12,000. Fresh capital introduced will not be mentioned here. Drawing will not be mentioned here. This is ending statement of affairs, and this is same like balance sheet. Difference is that balance sheet made through trial balance and capital actually is known, but here capital is balancing figure. In next slide you can see profit and loss count, the actual statement that every authority, tax authority, banks required. You can see that we started this statement from ending capital. This is ending capital figure. You can see that this was ending capital. Depreciation has been adjusted in ending statement of affair, but drawing and fresh capital will be adjusted in profit and loss count. In ending capital we have added back 60,000 rupees because it was the part of capital. Our client has taken it, draw it for his personal expense. Now this figure 1,582,800 is actually ending capital. We have also minus fresh capital because this amount was not earned or gained through normal business operations. Actually this amount he introduced out of his pocket or from his father, or he got it from his father, or sell out his any shop, or it was his savings, but this was not gained through normal business. day-to-day business operation, therefore it will be minus. Now at the end you can see that this is opening capital. We will also minus this opening capital. All this difference is 700 5800. This is a difference between opening and closing financial affairs. This is his profit. Simple, very simple. I request you, please like, subscribe and share and click on bell icon. Thanks.